Are you working in Papua New Guinea and wondering why so much of your salary goes to tax? Or maybe someone told you that school fees can be claimed, but you're not sure how. In this video, I'll break down everything you need to know, starting with the TPF-01 tax code form, tax refund claims, and the truth about school fee deductions. So stay till the end of this video. What is the TPF-01 form? What's commonly referred to as the TPF-01 form is officially known as the tax code form in Papua New Guinea. As of 2025, this form remains an essential requirement under the Internal Revenue Commission for all employees. It tells the IRC how much tax your employer should deduct from your salary based on your personal situation, whether this is your only job, if you have dependents, or if you are working multiple jobs. This form is officially labeled TAC-MX by the IRC, and it's your responsibility as the employee to complete and submit, not your employer's. The IRC uses this form to assign your correct tax code. For example, Code M is for individuals with one job and no dependents. Code ME applies if you have dependents like a spouse or children. And Code S is often applied by default if no form is submitted, assuming you have multiple jobs, which leads to higher tax deduction. If you don't submit this form when starting a new job, or if your situation changes and you don't update it, your employer may use this default code and you could end up paying more tax than you should. So in 2025 and beyond, the tax code declaration or TAC-MX form remains one of the most important documents every employee in PNG needs to get right. Helpful tip number 1. Always keep a copy of your tax declaration for your records and update it whenever your job or family status changes, like if you get a second job or have a child. This helps ensure you are always on the correct code and not overpaying or underpaying tax. If you're finding this helpful so far, please don't forget to subscribe to the channel for more simple and practical tax tips. Let's look at one of the most common ways people qualify for a refund. That's through what most people call the dependent rebate for individuals. This is a benefit offered by the government to help taxpayers who are supporting their families. And if you qualify, you could receive up to 1,050 kina back in your pocket every year. Let's break it down so you know how it works and how to claim it. To claim this rebate, your dependent must meet some basic rules. They must be your spouse, your child under 16 or under 25 if they are in full-time education, or your parents if you support them. Let's say you are supporting your wife and 2 children and none of them have any income. You'd be able to claim 350 kina for each one. That's total 1,050 kina. But if your wife earns, meaning if she is employed, you won't be able to claim her, but only your 2 children. File your annual tax return using the correct form, usually Form I. Include your dependents' details and state income for the year. Keep any records or documents that prove you genuinely supported them. Lastly, lodge your return through the IRC's online portal or submit it at your local IRC office. Many people miss out on refunds simply because they don't claim the rebate they are entitled to. If you are supporting your family and they meet the threshold, the government wants to ease your tax burden. That's what the dependent rebate is for, and claiming it could mean hundreds of kina back in your account. Helpful tip number 2. When claiming dependent rebates, it's a good idea to attach supporting documents along with your tax returns. This could include things like a copy of your dependent's ID, a school letter if they are students, or even a declaration confirming they don't earn income. These documents help prove that you are genuinely supporting them and can speed up the process of your rebate. Here's a clear breakdown of the truths about school fee deductions in PNG, including eligibility, private versus public schools, and how to apply. The school fee deduction is a tax benefit that allows salary or wage earners to reduce their taxable income by claiming actual school fees paid for their dependents. This could help lower your tax and possibly result in a tax refund. To qualify, you must meet all of the following 3. Be a salary or wage earner. Be paying school fees for your child or legal dependent. The dependent must be under 25 years old and in full-time education. You must have actually paid the fees yourself, not a scholarship sponsor or employer paid. Public schools like government primary schools or secondary schools, private schools including international schools or church-run schools, tertiary institutions like universities, colleges, or vocational schools. As long as the institution is legally registered, the dependent is in full-time study and you paid the fees directly. You can only claim actual fees you paid during the tax year. This includes tuition fee, registration fees, boarding fees. You cannot claim stationery, uniforms, or transport. Collect all receipts or invoices showing payment of school fees in your name. File your annual tax return and include the total school fees paid under deduction. Attach copies of receipts, proof of enrollment, and sometimes a letter from the school confirming the dependent's attendance. Submit your return to the IRC or lodge it online. Helpful tip number 3. Keep all your school fee receipts in one folder throughout the year. Come tax time, you'll have everything ready and you won't miss out on claiming what's rightfully yours. If you find this helpful, please like, subscribe, and hit that notification bell so you don't miss out on more practical tax tips in PNG. Thank you for watching.